Hello, everybody. Welcome to the REI Club Education Club at Intel. My name is Daniel Homland. Today, our guest speaker is Josie Heron. Josie, you are a multifamily syndicator, right?
That's
Can you
correct.
tell us a little bit about yourself and how you got started?
Sure. Hello, everyone. I am honored to be here. Thank you, Daniel. I actually have some slides I can run through if that's helpful, but a little bit of quick background about myself. I live in Denver. I shifted from a corporate career. I was working for Jacobs Engineering as a consultant and shifted into full-time real estate syndication full-time, 2.5 years ago, and had been interested in it, previous to then as well. So should I share my slides, Daniel, and just kind of dive in?
Yeah, go ahead. I know a lot of people are going to be interested in your transition, and yeah. I'm sure your slides will talk about that, but we'll probably bring up questions there. If you do have questions, put them in the chat. I will judiciously interrupt Josie, or if you want Josie, we can take them all at the end.
No, I like interaction. So yeah, please let me know if you have questions. Don't hesitate to come off mute as well and chime in. And we can. I'll give you my my background here and kind of my journey, and then we can just have a discussion at the end as well. Okay.
Sounds good.
Do you see?
Yes.
My slides. Okay.
Yes, we do.
Awesome. So my company is WayPoints Equity, and let me get the clicker going. Once again, honored to be here at your club. I'm very impressed by the size of this and the interest, and I think it's an amazing value that you guys have with the various guest speakers and just what I'm learning of what you do here. Great education source. So yeah, very cool. This is a little bit of my background. Is a little word heavy, but if I had to sum up, I started in the military. I went to the Coast Guard Academy, went into engineering, and eventually got my MBA and worked in finance for a while as well. So a little bit of a journey there. And most recently, like I mentioned, I found myself as an executive at Fortune 500 companies, similar in size, I believe, to Intel, and it was a phenomenal job. However, I hit burnout in a big way because I don't know how to do things part-time. I guess I couldn't find that balance. So I jumped in all the way, and I was traveling and I was growing teams, and had some pretty big pain points with that, as well as I had some life events, which I think many people do, unfortunately, that were really, really hard for me. And so I call these, I had several epiphanies that led to the name of my company, WayPoints Equity. Which on your journey, I think there are those defining moments, and I can name a couple of them for me that really just it opened my mind and gave me some perspective as to what do I want to do with my life and how do I want to live it, and what does that look like. I started looking into multifamily investing. I was exposed to it with through a network I was in. Someone had a very large deal, and I was looking to invest some funds. And as soon as I looked at the pro forma, my engineering and finance brain just like were jumping up and down. And I was so, taken with the fact that investing in real estate, and large real estate in particular, because we had done a couple smaller, single family deals and short-term rental deals. It really is a pretty simple math equation, and you just have to build the right team. And a lot of what the group that put that first deal together, what they were doing, it was the same stuff that I had done. And my experience in the corporate world, I was negotiating really large contracts. I was managing, I was in asset management, so I was managing, large portfolios of assets, and it all kind of came, full circle for me. So I joined a real estate accelerator. That was a springboard in a community, and the network, what you guys have here, is so powerful in building, whatever it is you want to grow. And I've since actually created a couple networks as well, where you see the dynamic and you see people working together, and some partnerships and some deals, they all happen in these kind of groups. So it is really, really wonderful to be here. I also learned about the benefits of being a real estate professional and took full advantage of that, in the last couple of years, and that has been, powerful. So, Daniel, you mentioned the, kind of the generational wealth and the estate planning. And really, I feel like my path to get into real estate was really a path to legally avoid taxes, and invest smartly. So that's a huge piece of my story, but it kind of took off from there. And then, the scaling and massive action, when I went into the accelerator that I went through, it was just like a 6-month course. It was focused on learning how to underwrite deals and that type of thing. But mostly at the single family level. But because I had had that exposure to that multifamily deal ahead of time, I knew that that's where I was going. So I got really clear, and it took a couple months to get really clear on my goals and my direction. But once I had that, I used the accelerator really as a springboard, to jump into what my business is now.
Hey, Josie, you've mentioned the accelerator a couple of times now.
I know.
Do you mind if I ask whose it was?
Yeah, so it's actually super niche, kind of like Intel, here. It was a military investor accelerator. I mentioned I had a military background before I went.
So is that with Hutch?
It's not with Hutch, but I do love Hutch. He's phenomenal. Yeah.
Okay.
Yep. So one of the things that you do is you dig into your why and really get that clarity. So this is my little vision board, about what was important to me, and I've used my business to kind of move more towards these things. You can see, one, I want to have fun. I want to be with my family. I want to continue to provide service and have challenge. And so growing my business has definitely been a very rewarding challenge. But as I was starting out, I kind of wrote a business plan for myself. Like, what is this real estate investing going to look like? And this is my first draft. So this is a while ago, and it's been updated, but I thought that I would, buy 2 to 3 properties in a market. And this was thinking, smaller, like single family homes, turnkey. And I broke it down into strategy, figure out the strategy. So that would be single family homes, figure out which market, figure out the team, and then find the properties. Instead of getting really excited about, it's really easy to get excited about deals you see that may or may not be in your targeted, focus. So that was my plan. I was going to start small and learn, and then I was going to move on to larger properties and syndications. And then I put all these great little houses down there, eventually to multifamily. So what I ended up doing is getting really stuck. And then the next couple of slides are about market analysis and my own personal market analysis, because I got really stuck on where to invest. And I ended up later partnering with a lot of several folks from California and Hawaii and these markets where in Colorado it's really hard to get good cash flowing deals, which was my goal in these markets. So I was all over the place. I was looking, talking to brokers and looking on like LoopNet and Zillow all over the country. And so it took me a while to get through that. And this was right at the time the pandemic was hitting, like literally March and April. And I'm looking for markets and trying to find deals that work. So I created a couple metrics, and hopefully some of you guys out there with the STEM mindset can appreciate this. And it's not perfect science, but I put a bunch of just open source data on several different markets that I just heard people talking about, and I wanted to do my own homework. So I looked at rent to price ratio and drew a line and said anything above this line is going to be considered as a market. And then same, I did a growth metric, and that was based on population growth as well as job growth. And this once again is a metric that resonated with me, and I drew a line, and then I compared the two. And this data, just so you know, this is 2 years old at this point, and so things have changed a bit. But that at least helped me kind of narrow things down, because I was overwhelmed. But I also knew whenever I found my market, I wasn't just going to buy one property there. I was going to build a team there, and that's why it was really a big deal for me. So you can see here, Columbus, showed up really high. Indianapolis, in Jacksonville, others of note. We had in Colorado. I really wanted to invest here because to be kind of tangible, but you just couldn't get the rent to price ratios to pan out. Where I ended up investing was in Kansas City, and I'll tell you why. So if you go back here, it didn't quite make the cut for rent or job and population growth, but it was strong. But what it really came down to is I was in the middle of the pandemic, and it was going to be my first, kind of step into multifamily, and I wanted to see it. And so I actually drove with Kansas City, it was within driving distance. So I drove there several times in the middle of the pandemic. Well, I mean, the pandemic's still going, but in the beginning, just to, meet a broker outside and go get a feel for the land and do my research that way. So that was my choice. And what ends up happening then is I have built a business there. We now have almost 400 units in Kansas City. That's 6 different multifamily properties. 5 of them are syndicated. I also have 2 properties of my own, and several partnerships as well. And so it really took off. And essentially I picked a market and built this whole business model there. I've got contractors and property managers and lawyers, local banks. I talked to the presidents of local banks, and all these great Midwestern folks. And it's been really amazing. So you can see here some of the properties that we did buy. They're mostly C class, some B class. One of them is all student housing, just a block from KU. And we just went through a bunch of renovations, and the craziness of leasing to college kids in August is just mad. But it's great. It's been a great property. That's the Sunrise Terrace one. And some of them as well, kind of with my engineering background, I took lead on the renovation. So we put $1 million into Redwood Courts. We bought it for, I think, 2.8. We're putting $1 million into it. 2.8 was a really, really good deal. It's 44 townhomes, and just added value. And I've done that with a couple of the other properties here as well. So it's given me amazing experience on both ends of the spectrum. Some of these properties are turnkey and they're beautiful, and they just work. And some of them we've had to put a lot of effort into, and I've learned a ton of lessons on how to and how not to renovate multifamily properties, because essentially each one of these comes down to a small business. You've got you have to keep track of all those factors. A really fun one in Coronado, California, you might notice that doesn't quite fit in the portfolio here. That property, I was hosting a free meetup that, just people trying to learn about multifamily. And some of the guys brought me this deal, and they said, we're looking at a 7-unit property in Coronado. And I'm like, yeah, you're crazy. So, and it was, 3.6 million. And I'm like, so I'm used to Kansas City numbers, and I'm having a hard time with this right now. So, but essentially they came to me because I knew how to put together these bigger, syndications and raise money and, guarantee loans and do that whole piece. And the business model here is short-term rental. So we have 7 short-term rentals, block from Hotel Dell, and it is amazing. This property has really taken off. But I will tell you, for anyone who is in the short-term rental space, which is an amazing space to be in, it is like almost a full-time business. I am on, chat and phone calls with my partners for these 7 units almost daily, because there's so much activity in a property like this. So then I updated my market analysis recently. I'm entering, next phase, which is also a really interesting time right now with the current markets to be looking at, my next phase of growth. I feel like, I've run the motto in Kansas City, and I am ready to move forward and move on. So I'm actually looking personally for larger deals not personally, but, jointly with my business, larger deals in Colorado that I could do the value add strategy to. But the problem there, of course, is getting them to make sense with the prices, the now interest rates, and the higher rents. But, so I'm toying with that. I've been looking for a while with a partnership in Florida at some larger deals there as well. And then my business operations manager is actually relocating to a market in Florida that I'm very much interested in. And so we're looking at deals that WayPoints Equity, alone could take down there. And so the model, I think many of you are familiar with it. My company partners with others to buy these super big deals. But my company itself, I can probably buy deals up to $7-8 million, and as long as they work, keep that in-house as well. So more charts and metrics, but essentially, I'm leaning towards Florida, like I just said. I just refreshed all the data in my original analysis there. And then the philosophy of my company, is built, it's obviously very personal for me. This journey was really about making change in my life, maybe taking a breath, taking control of my efforts and where I'm going. And I like to provide that, to anyone who's involved. And I do say, I have investors. I do say to all of them, like, I am an investor first in every single deal that I'm in. I'm looking for returns on my money. I'm looking for what's best for me. And I take that very seriously. The people who do work with me are professionals, they're family members, they're friends, they're military members. And there's a huge responsibility for anybody who's ever gone into business with someone. And I could talk about partnership risk as well, because I think that is very real in this business. And I think people get really excited about properties and they jump into deals with people without truly vetting their partners. But yeah, the people piece of it is very real. The responsibility is very real to me. So, and a lot of, what I do is in service of others as well. We've sponsored and we give back to various charities, but we sponsored some tiny homes for homeless vets and that type of thing. And that feels super good. And so I think that's it. Hopefully I didn't dive too deep with the market stuff, but that was just my process, to some degree in my journey, on this path in multifamily. It's been amazing. I think they say like the first day in business and the last day are the best, and I think they say that because it's not always roses, but the lessons I've learned by just diving in, like I have been pretty real. And I also recognize some pretty big, gaps that I have. And I have, obviously worked to fill those with the right people and tools to keep things moving forward. So I think I'll pause there and just kind of maybe get your reaction, Daniel, or see if there's any questions.
Well, yeah, I've got a lot of questions, and other people, I guess, do you want other people just to speak up? You can speak up or put it in the chat, any way that you want to do it. But I'm fascinated with the idea of people who quit their day job. You said you're an executive at a large company. What prompted you to quit your job? Why did you do that? And what amount of certainty did you have in quitting it? I mean, had you already established a track record while at your job?
Yeah.
What was
So
that like?
I feel a little bad because I'm not trying to tell everybody to quit their job. That's not the message I'm trying to give here, but that is my story. So a big part of that it really was, that I gave so much of myself to my company, but it was at the expense of myself. And I think that might just be, the background and where I was coming from. And I jumped in and I was trying to prove something and, make everybody happy, the clients, the company, my team. And it was an amazing job, amazing company. But for me, I was, things were cracking. I was gone 75% of the time. I've got 3 daughters. I've got a husband who I love and I want him to love me too, and so it was so much and I didn't know how to dial it back. And so I was looking for something, and to be perfectly honest and maybe a little vulnerable, like I had a pretty traumatic loss in my close family and it really shook me. And the fact I can say that right now without even crying means I've moved, I'm healing, but it really just made me pause and say, what am I doing? Like, why am I giving all of myself, to this idea that I need to reach a potential? And so, through some reflection, and it was many months, of me trying to find, once I found multifamily investing, it was many, many months, almost a year before I really took that step. But over those months, I kind of made my decision to do this. And then I found the networks and the resources. And really, I didn't leave until I was in a partnership already for multifamily. And we had another, property that was coming and I could see that it was going to work. And it absolutely did. And I'll tell you that through bonus depreciation and accelerated depreciation, I saved in taxes that next year, plus, through different income from real estate, like I was whole, a year later. So
That's great.
Yeah.
Okay. And I see the questions are starting to come in about partnerships, interest rates. How do you deal with medical? Before we get to some of those, though, I want to ask you a little bit more about the markets that you chose, because you chose, and all the rage is down in Florida when it's not underwater, right?
Oh my God.
And everybody's buying in Texas.
Right.
But you're buying in the Midwest, and I actually really like the Midwest too, just because there's good income properties there, and maybe that's why you're there too. But can you describe to me why do you like Kansas City and Missouri, and why do you invest there?
Yeah, I mean, it really was going through that exercise, and it was a solid market. It wasn't the hottest, but I didn't want to go to the hottest market and have to compete with everybody else. And it's the relationships that I've made are so strong there, and there's loyalty as well, which is great. Like my brokers will send me deals first because they know I can close and get the job done. But really it was a cash flow. It was a cash flow play. I was looking for properties that that I could get them at a value that it would work for cash flow. And that is shifting some now, now that I've got some good solid experience with the value add play, which I think has huge upside, but you really have to know what you're doing, and you have to buy in the right place too.
Are you actually part of the asset management team for these properties? And you're working with the renovation crew or directing them, in other words?
I am, yep.
Okay, great. There's quite a few questions here about interest rates. I'm scanning them really quickly. And one thing I think that's really smart about investing in the Midwest is that these are steady markets. They're appreciating markets, but they're not markets that appreciate to excess and then drop a lot. Right. I think there's a lot more exposure to problems with interest rates if you're in well, California. Yeah, I guess you do have a property there.
Yeah.
But the East Coast and other areas too. Actually, why don't you tell us a little bit more about your California property? What made that property a worthwhile purchase?
So the location, it is, like I said, a block from Hotel Del, which gets on average $1,000 a night per room. The property itself was, needed significant renovations. So we put almost $50,000 into each of the units, and made them, brought them up to like a luxury standard. But just, it was really the experience that my team brought with short-term rentals and their confidence that we could make this work. We ran all the models, and the numbers, the numbers showed us that at a minimum, we were going to bring in $40,000 a month in revenue at that property. And we've outperformed that. It's been operating, at fully for a little bit over a year, and we've outperformed that, almost from the first month that we were up and running. And so, yeah, but the risk was real. And I tend to be more conservative because I am signing on the loans, and I am the one that everybody's looking to talk to investors. And if there's a problem with, legal or accounting, like I'm also lead on that. And so it's very real for me. And so when they brought me this deal, I remember thinking like, I'm sure you guys at some point do, like risk analysis, and I ran that, and I'm like, guys, we're kind of pagan red here, like this, this is, I got a couple flags that are, popping up, but, it really was the business model. And once I started to understand the short-term application in a multifamily environment, it really made sense, and it resonated. Yeah, but it's been a crazy, we've had that since April of last year. It's been quite the ride, we're there, but it's been pretty intense.
Is that a short-term rental property, or are you renting them out to long-term tenants?
Yeah, short-term.
Okay, interesting.
Yeah.
How much more work does that add to the property?
Quite a bit.
Yeah.
Quite a bit. Things always need maintenance. Plus, it was 100 years old to begin with, and so there's that part of it.
All right.
Yeah.
Well, Henry is asking, do you create your own spreadsheets, or do you have someone else do the spreadsheet work for you? I guess, do you create your own spreadsheets, and do you enter data into your own spreadsheets are the two questions.
So Henry, I so appreciate you, because I can get lost in spreadsheets. And so I've taken a lot of different models, and I have created my own, and I do all my data entry as well. I have a couple people who feed me deals, and there's some pretty quick checks I can do on whether or not it's worth doing the deep dive. But yeah, I do my own analysis in a way that makes sense to me, and it's not as complicated for some of you who might have like, some of the more complex underwriting tools out there. It's not as complicated as those tools, but I think that's why it works so well for me. And if I need to, I can pop them in. If I'm doing a much bigger deal, I'll pop it into a bigger spreadsheet.
Okay. Do you have any particular spreadsheet templates that you like?
Yeah, so I guess I have to drop names. I started with the Michael Blanc template, and that one is solid. The Sumrock template is simpler, easy to kind of navigate. But what I ended up really tailoring was a spreadsheet I got from a local broker in Kansas City, and I don't know if they had created it in-house, but I basically took their template and added in some of the features that I liked. And I feel like
FTW?
No.
Oh, okay.
I
actually use their template quite a bit.
Okay, yeah. No, it's not, but yeah, that's kind of how I've got to where I've gotten, and collected other tools and templates as I go.
So I think, as you start doing this, and as you start talking to people and partners, you'll get sent a lot of different templates, and it's often really interesting to like run your deal through two different templates and see where they differ, because that can often help you pick apart some of the nuance in the deal, and how and also how the different templates, slightly vary in how they handle the deal structure. So it's really educational to do it more than one template. Ashish is asking, sorry, I'm the moderator. I shouldn't be speaking so much. Ashish is asking, saying, great story, Josie. Thanks for sharing. With the interest rate hikes, at what rate do you stop buying new assets?
I'm assuming when you say new, you mean just more properties. So far, I haven't bought anything that's new.
At what interest rate do you stop acquiring?
Yeah. I mean, right now I would say I'm on pause. Interest rates are looking like they're close to 7% right now. You can get a little bit lower on commercial, but it's amazing how quickly that kills a deal. So I'm looking, maybe this is a little bit of a distraction from my main business, but I'm starting to work with some developers, and I'm going to help them put together, a package and a financing kind of package. And I think maybe the right answer is, I think you can always look. It depends on the strategy. If you're going to do a deal that you're planning to refinance, and you can, with some certainty, less risk, get behind that strategy, I think you continue to look now. But I do think it's going to be 6 months, maybe 9 months, where it's going to be really rocky. And I can see, I'm actually trying to sell a property right now, and I should have sold 6 months. I should have sold 6 months ago. I should have sold in the beginning of the year, because it's no longer a seller's market. For a long time it was. So if you're thinking about buying, I think that there will be deals, and they're starting to be out there, and you can negotiate prices now in ways that you couldn't a year ago. But you have to be able to prove that strategy, at that interest rate. So yeah, it's tricky, and I don't necessarily have a crystal ball, but I wish I did.
Yeah. I actually, and I'm going to throw in here, while we're talking about interest rates, what are your thoughts on inflation as well?
Yeah, same. I think I actually had a good presentation. Maybe I can send that to you to share with the group as well. Essentially, I think it will continue on its path right now, and then level out through most of 2023, and then start to hopefully come down. But essentially, I feel like the Fed has tried to counteract where we were years ago, quantitative easing and all these things that brought our interest rates to a place that was really nice for a while. But now they've overswung in the other direction, and essentially they are breaking the economy. Whether or not it's exactly to the extent that they were trying, this is the way that it's going, and that's going to be painful for a while for investors. So hopefully, for those of you out there who are in deals, hopefully that you don't have variable interest loans, or you can at least weather it if you do. And I do think the path forward as well, just to be on the safer side, is to have more equity in the deal, and not go for, and you will probably want to be able to get lending on higher loan to value type properties.
Yeah, LTVs have been going down quite a bit. Yeah. I've seen like 60s for a lot of LTVs recently.
Yep.
Yeah. Okay. So Brooke, May is asking, you mentioned one hire. Henry again. Henry says, how do you deal with medical and health insurance after you left your job?
Yeah, great question. So eventually I will be going on the open market and just paying the price. Right now I'm still in the Coast Guard reserves. Actually, I think that might have been on one of my slides. So I get healthcare through my side hustle, which is really nice. And it covers the family, and it's affordable. But I've been in the reserves now I've been in the Coast Guard for 22 years. So that's not going to last forever. I'll probably wrap it up in a year, and we are pricing out what that will look like healthcare wise, which is not cheap. So yeah, but that's a great point. Thanks for bringing it up.
Yeah,
I'll find a great solution and I'll share it with you guys all.
that'd be great, because I know that, you know, people are looking, whether it's some sort of group assurance or a group solution. There's a lot of interesting groups to go with when you're on your own.
Yeah.
You need some sort of collective bargaining almost. May is asking, you mentioned partnership risk, and this is a great question. What criteria do you use to vet your partners?
Yeah, I love this question. I'm very glad you asked it. So my first go around, I was looking for experience, and I was looking for what is going to be a good team from a skill set standpoint so that we can get deals done. And that was very successful for a time. But what I realize now, and I'm in, you know, 2 other partnerships, and I can explain more on the third here shortly. You really need to know what that person or those people are about, and that you have to have some common values. You need to know what their work ethic is. You need to know if you're aligned, you know, on your vision, and just it's all of the soft touch stuff that is so important. And if there's, you know, one piece of advice I could give, if you're talking to someone about partnering and you have any kind of gut feeling or any of your intuition that something might not work well, like, I would recommend listening to that or digging into it deeper, because I've seen some very successful people in this business that get sidelined because the partnership fails. And then, you know, the other part is too, like, when things go wrong, because there is going to be a call for a $15,000 water heater when you're not expecting it, you know, and when things go wrong, like, how do you work through that, you know, with your partner? So, what I recommend, you know, is don't go into a partnership with somebody you don't know. You know, and groups like this are phenomenal because you can get to know each other, or hopefully there's like side groups and that type of thing. But over time, I've found, you know, several people, and it's been a very short list that I want to move forward with. One of them is in Florida, and I actually pitched this individual. Like, I've been in circles with them, and I sat down and did a reset. And I said, moving forward, who do I want to work with? You know, who's in that very tight circle? And I pitched and I said, we should work together. And he agreed. And so we're moving forward. But that's after learning, you know, and my partnership in Kansas City is operational, but I've been on highly functional teams and very professional teams, you know, my whole career. And this one is very challenged. We're making it work for all intents and purposes, but yeah, there's risk there. So just, you know, go in eyes wide open and ask questions.
Let's see. I think you covered Brooke's question here as well. He was asking, how do you put together your team, and how do you recruit or vet your partners? So if you have any more to say on that, we could pause, but I'll go to the next question too.
Yeah, I mean, I think at this point I'm in a good position that I do get to select my partners. In the beginning, I was like just trying to get into a deal, you know, and provide my value. So that was a little trickier. But yeah, that's yeah. Just
all right.
be intentional.
Ashish, who is on top of it investor here, is asking about what impact do you think that the gradual sunset of bonus depreciation will have on long-term property values?
Man, Ashish, that's like a next level question. I think I don't know that it will have a huge impact on property values. I know for certain that there's a large segment of investors who are looking for that. But I think the inherent value of real estate as an investment, for all of the reasons, you know, will continue to keep those values, you know, where they would be otherwise. And what I also believe is, you know, the tax incentives are kind of cyclical, and whether or not it's bonus depreciation or something else, you know, I think that if that, you know, as that moves away, as we sunset bonus depreciation, there will be other incentives down the road, you know, for tax breaks with real estate.
Yeah, I've got to add my 2 cents here too. So, I mean, for those of you who don't know, at the end of this year, bonus depreciation is going to be going from 100% of the value of the property down to 50% of the value of the property. And then in 2024, it goes down. I should look this up, but I think to 25, but it's being phased downwards.
Yeah.
And so, one of the things I would say is that there's more than one way to make money with real estate, right? You're making money through rents and income. You're making money because inflation is driving down the value of the debt that you have, and you're paying your debt back in cheaper dollars. You are getting money back through taxation, and you're getting money back through capital appreciation or forcing the value up in your property. And so there's definitely different ways, multiple ways, it's a multidimensional asset. And the other thing too is that depreciation does help people who are real estate professionals a lot more than people that have W-2 jobs. And this is just true, if you have an investment and you are receiving passive income from it, the depreciation will offset that passive income, but it won't offset your W-2 job. And so honestly, for people that are investing as W-2 investors, if you're in a couple of these deals, you end up with so much depreciation, it just rolls over from year to year to year. I have that problem. I have more depreciation than I can take, and it's a problem. So I don't know that it would necessarily impact the amount of money that would come in from at least individual investors. Sorry, I had to throw my 2 cents in there. Yeah. I had a few things to say. I'll go to your next question.
Well, and I love your problem too. It's a good problem to have, too much depreciation.
Yeah, well, yes and no. I mean, the largest amount of my taxes are from my job, and so I need to figure out ways of reducing that.
I hear you.
Okay, so where are we here? Oh, Henry, how did you first get your funding when you first started?
Yeah, so the first multifamily property I got into was actually a property that my husband and myself bought, and we just financed it ourselves. So 24 units, it was under $1 million, purchase, which is amazing to think of when I know the home prices around here. You can buy a house, and in California, you can buy a garage, or whatever it is these days. But we just bought that ourselves. The next deal that I did was with partners, and that was a joint venture because we only had 6 of us and we were investing together. We bought 80 townhomes, and the financing for that. So we brought the down payment. That was a bank loan, and a lot of the deals I've done have been just local banks down, in the area that want to invest in their communities, and so they will lend. And obviously, we had to qualify for the loan. But that's first getting started. I was in a fortunate position that we had some capital to invest. And depending where you come in on that front, you can bring money yourself, or you can find strong partners or interested investors to work alongside of you to get those loans.
I'm going to jump down to 2 compliments really quickly. Henry says, Josie, that is awesome. I'm not sure when exactly I was put into the comments, but something you said was awesome. Many things you said were awesome.
Oh, the spreadsheet, Henry.
Okay, it was the spreadsheet. Okay. And then Eugenio is saying down here, were you always brave, or did you develop it?
Thanks, man. I love that the best, Eugenio. It was the experiences I had in life that woke me up, and I just needed to do something. But no, I mean, there's so many things to navigate, and to leave a job like I did, it was nuts. And I didn't even tell anybody. I didn't make it LinkedIn, official that I had left for 6 months because of what I thought the perception would be. Why would you do that? But I felt so certain that, for once I could take all of my skills and apply them in a direction that was in my best interest. But it really, unfortunately, it took some really hard life things. And I've had three three different instances of pretty devastating, life events that really just made me stop. And the third one, finally, I was like, okay, like I need to pay attention. So, but thank you. Yeah, I don't know. I haven't been called brave before, not recently. So I'm maybe I'll take a screenshot of that and keep it on my wall.
Brooke is asking, did you consider outsourcing or using virtual assistants in your short-term rentals in Colorado?
In
Or
Colorado?
Coronado.
Yeah, we do. So we've got a local short-term rental manager there. But we're still so involved as owners. And then he has got virtual assistants, and I also have some as well. So it's just a really busy property. But yeah, great question.
I'm also curious, what do you pay your cleaners for each unit turn?
Yeah,
that's always something that's.
I think we're at like 200.
Okay.
Well, 200 is what we charge the guests, and then I think we pay the cleaners, less than that. And I can get the numbers if you really need to know.
Oh, that's okay. No, I'm just curious because there are quite a few people here that own short-term rentals as well, and
Great.
I guess depending on the number of bedrooms, the cleaning prices are expensive.
Well, it is really just the last 2 years. We've had a short-term rental in Keystone, Colorado, and when COVID hit, like the prices for cleaning just skyrocketed. So, which is good. I mean, I think everybody feels a little safer with as long as they're actually doing the work and not just charging the price, like they feel a little better.
All right. And we've got 8 more minutes in the discussion here. Keep your questions coming. Peter and Henry both have great questions here. Peter's question is, what sources do you recommend to compare cities for investment?
Yeah, there's a couple. I think Best Cities, Zillow Research. If you guys haven't dug into the Zillow Research, you can download like huge databases on cities down to neighborhoods. So look into that. It's all free source, based on, I know Zillow pricing isn't always right, but they've got the job, kind of information there. Best places, and then what was the city one?
City-data.com.
Yeah, that's it. Thank you. Yeah, so those are kind of the main ones, and I just had my little spreadsheet that I kind of plugged everything in for the cities I was looking at. But there's a lot of information out there that you can find.
Yeah. Did you get access to Yardi or CoStar or any of those types of sources of information?
Yep, and I've used that as well. I don't have like a subscription, but I will have brokers who send them to me, and that is so helpful. Yeah,
my lender will send that to me, and it's great. I actually asked her what her subscription price was, and she pays $1,500 a month for their CoStar subscription, which, my goodness, that's an expensive subscription.
So the lesson there is to be the holder of the information.
Right. Yeah. You can help your clients a lot if that's how you're doing it. And then, I just lost my chat box. Henry had a great question. Have you ever considered being less hands-on and more just a limited partner?
Yes. Oh my gosh. So what I've done is created this busy work of a job for myself, especially because I do a lot of the things. I do asset management. I bring in the deals, but my skill set, what I'm realizing is that I should pull back and find the right people to do those other things. And moving forward, I will continue to syndicate and be a multifamily investor, but I am looking at more of those passive income kind of investments that are truly passive as well, because it is a lot, and especially in the size of properties that we buy, it's between like 40 and 80 units, and each one of them is truly a business, and it takes time and effort. I mean, to the point that I was on the phone earlier with a contractor, telling him he needs to hurry up and install HVAC in this one unit, and I, again, came from a strategic level, and I'm now down in the weeds, and I'm working to pull myself out. But moving forward, I do want to be more on the strategy side. And, personally, I mean, the goal is to bring the passive income up and up and up. And, there's a lot of different ways to do that. But yeah, really good question, Henry. I think we should have coffee.
I really like Madeline's question here too. Thank you for sharing your experience. Is there anything you miss from your past corporate job? Do you have any regrets?
Oh my gosh, you are so reading me. There are definitely days that I miss the structure, the people. This can be pretty lonely, especially when I'm trying to lead. A lot of people are used to me telling what to do, but it doesn't mean, that I have a water cooler team or, a sounding board to bounce things off of. I work really well in highly functioning organizations. That's how I grew up, in my career. And so to jump off and try to do my own thing, there's days that I doubt myself and I'm like, oh man, or I look at my task list and I'm like, really? This is what I have to do today? So, but then there's the really fun things as well. I'm starting a network for women veteran executives, and that feels super exciting. And I can share all of these experiences with them. And I'm also helping a lot of people, in the different networks I'm in, get into multifamily and doing some coaching and even just learning about investing in general, like a lot of what you guys are doing here. And that feels amazing. It's very validating. But yeah, there are days that I think, well, I think my job would take me back. Like if, not because my business is not, I feel like my business has been very successful, but because sometimes it feels like a big lift for sure.
Hey, everybody, could you take yourselves off mute and thank Josie for being here?
Oh, that'd be nice.
Thank you.
Thank you, Josie.
Thank you.
Josie, that was
Josie.
awesome.
Thank you.
Thank you.
Great.
Thank you guys.
Thank you, Josie.
All right. Thank you, Josie. That was great. I love just real talk. Real talk is wonderful. So you can put your contact information up there again, too, for anybody who would like to reach out to Josie.
Yeah.
And next week, we're going to have Shanadi, who is going to be speaking to us about mentoring with short-term rentals.
Yeah. Well, maybe I'll get a job at Intel so I can be part of your club.
There are people that have left that are still part of the club, so maybe you can join.
Oh, that's wonderful.
Yeah, let's see. Let's catch
I'm
up offline, Josie. I would love to talk to you more too.
Yeah, that sounds great. And anybody out there, if you're still there, feel free to reach out with questions. I give a lot of my time to folks. So if there's anything I could be helpful with your journey, let me know. Email or jump on my calendar as well.
All right. Have a wonderful weekend, everybody.
Thank you.
Thank you.